Okay, so now we are going to attempt the September-December 2025 past exam question. So the question number one is in front of your screen. Let's see what question number one has for us. This scenario relates to 7 requirements. So there are 7 requirements. It is 1st July, Quirky Quadbike manufactures ready mixed concrete, which it supplies to wide range of customers throughout the country. Company's year end is 31st July 2005. You're an audit supervisor at Payroll. So if you're an audit supervisor at Payroll is the audit firm. You are reviewing the systems documentation and preparation for the interim audit and attendance at the year-end inventory count. Although payroll and inventory are standalone items, the sales and purchase modules are fully integrated into the computerized accounting system. Sales and purchases modules are fully integrated into the accounting system. System documentation. The company undertakes continuous production 24 hours a day. Raw material will be transferred from the warehouse to the factory during the inventory count on 31st July 2005 so that production can continue. However, no goods will be received from suppliers or dispatched to customers during this period. Raw material will be transferred to the factory for production, but no goods will be received from suppliers or dispatched to customers. You will move raw materials during the inventory count, but no dispatch of goods to customers or no purchase of raw materials will take place. Raw materials required in the production are requested by factory supervisors. Requisition forms are sent to purchase ordering department for authorization and processing. Requisition forms contain details of material required but do not detail the current inventory levels. On receipt of goods from suppliers, the quantities received are checked by warehouse assistant against the supplier's delivery note. So see, quantities received are checked against supplier's delivery note. A GRN is electronically produced by the warehouse assistant. Notifications are sent to relevant departments. Once received, purchase invoices are matched to GRN and logged into payable system by payables clerk. Application controls are used to check the accuracy of input. Each receivable clerk is responsible for processing the sale of transactions for a given set of customers and is able to make changes to customers' details in the master file. Each clerk is responsible for processing sales transactions, able to make changes in master file. On a monthly basis, customer statements are produced, sent out, but no further follow-up of outstanding debts is undertaken by the company's credit controller. Regular statements are sent to customers, but no further follow-up of outstanding debts is undertaken by credit controller. Most customers make payment by bank transfer. Each day, a finance clerk posts the bank transfer receipt from bank statements to the bank ledger account and updates the customer account. Same clerk performs the monthly bank reconciliation. So what happens? Customers pay by bank transfer. Every day, finance clerk posts the bank receipts from bank statements to the bank ledger accounts, updates the customer accounts. Whoever has paid, he updates them. Same clerk also performs a reconciliation. Quirky Quadbike has a human resource department which is responsible for setting up new permanent employees. An authorized joiner form containing all relevant details, including a unique employee number, is sent to payroll department so that new employees can be added to the payroll. During busy periods, the company recruits temporary employees and joiner forms are not completed, and instead these appointments are processed by the production director who informs the payroll department by email. During busy season, you recruit temporary employees, no joiner forms are there, and just the production director processes them and informs the payroll department. Okay. I will read this again, I think, when the relevant requirement comes, but the general thing is that it is 1st July. Quirky Quadbikes manufactures concrete, which is supplies to warranty customers. Company's year end is 31st July. You are audit supervisor at Payroll. You are reviewing systems documentation, and systems documentation is production is 24 hours a day. Raw material will be transferred from warehouse to the factory during inventory count on 31st July. Raw material will be transferred, but no sale or purchase will be made. Okay. Then raw material process, then receivable process, then HR process. Okay. After everything, these just I'm seeing 2 requirements here of 2 marks and 1 mark. Explain why auditor obtains understanding of internal control relevant to audit. Why auditor obtains understanding of entity. This is not why, what, how, understanding the entity. No. It's explain why auditor obtains understanding of entity. No. Why auditor obtains understanding of internal control. Why he obtains understanding of internal control. Okay. And identify 2 methods auditor could use to obtain understanding of system control. Okay, so firstly, why auditor obtains understanding of entity, it's not the requirement. Why auditor obtains understanding of internal control. And second, 2 methods auditor could use to obtain understanding. Okay. Okay, so first requirement is of 2 marks. I have to write 2 points. Why auditor obtains understanding of internal control. So why an auditor goes in the company and obtains understanding of internal control. Okay. Auditor obtains understanding of internal controls so that he can perform test of controls. If he doesn't have knowledge of internal controls, he cannot perform test of controls. So he obtains understanding of internal controls, what controls are operating in the company, so that he can perform test of controls. Why auditor will be interested in knowing that, oh, there are CCTVs in the company? Why? Because he wants to perform test of controls. There is segregation of duty control. Why? Because he can perform test of controls. So auditor obtains understanding of controls to perform test of controls. And second, this thing was taught in the class that auditor obtains understanding of controls so that he can design further audit procedures. Like I told you, if he finds controls are strong, then he may perform less audit procedures. And vice versa, if controls are weak, then he mean to perform more procedures. Okay, so he obtains understanding of controls so that he can perform test of controls, and he obtains understanding of controls so that he can decide whether I need to do more audit procedures, substantive testing, or less. Because strong controls means less testing, or weak controls means more testing. Okay, so auditor obtains understanding of controls to perform test of controls and to design audit procedures. Okay, part two. Identify two methods auditor can use to obtain understanding of companies. How auditor can obtain understanding of internal controls? Through discussion, just one mark, with management and employees. Through observation, whole system. How can I get understanding company's internal control, that what controls are there? I can observe myself whether there are cameras, segregation, security guards sitting or not. Or I can discuss with management and employees. Okay, so these were three easy marks. Why you need understanding of internal control so that you can perform TOCs and you can design audit procedures, and you can obtain understanding via observation, as well as you can just roam around and observe. Okay, please note, then I will move towards the next part. Okay, Very easy requirement then, and which comes in every attempt. We are prepared for this before going in the exam in respect of the internal control of Quirky Quadbike. Identify and explain six deficiencies, recommend a control, and describe a test of control. So weakness, recommendation, test of control, six required. Okay, so we will read the scenario now, and we will write six. Okay. Okay, now as far as the weaknesses are concerned, let's just read. The company undertakes continuous production 24 hours daily. Raw material will be transferred from the warehouse to the factory during inventory count on 31st July so that production can continue. The company undertakes continuous production 24 hours. You are doing production 24 hours. Raw material will be transferred from the warehouse to the factory during inventory count on 31st July. Inventory count is on 31st July. Raw material will be transferred from the warehouse to the factory so that production can take place, but no goods will be received from suppliers dispatched to customers. So weakness, right? Raw material will be moved from warehouse to the factory during inventory count. You have studied this, that when movement is there during the count, there is a risk raw material may be double counted or missed from count, leading to misstatement in inventory. Okay, you are doing inventory count. Okay, and raw material is being moved. So obviously either there will be double counting or some items can be missed. Recommendation: raw material movement can be stopped during inventory count, or if it's happening, it must be ensured such inventory to be moved is marked separately so that it is not missed or double counted. So your control is either stop the movement or this inventory should be kept separate. Okay, how to test this? Observe the raw material movement on day of count to ensure they are marked separately. Okay. Raw material required in the production are requested by factory supervisors. So raw material required are requested by factory supervisors. Requisition forms are sent to purchase ordering department for authorization processing. The requisition forms contain details of material required, but do not detail current inventory levels. This is a weakness, that when you send requisition forms to the purchase order department, they don't detail the current inventory levels. What will happen? When requisition forms are sent to the ordering department and they don't mention the current inventory levels, obviously ordering department won't know whether inventory is placed or not. They make time in ordering, they may take time in ordering, which may arrive late, and you won't be able to fulfill the order. I mean, not mentioning the current inventory levels will not show whether there is urgency or not. You just sent the order form. They said, okay, we will order. Current inventory levels are not mentioned. They may take some time and you may run out of stocks. The good thing is that the requisition form should contain current inventory levels so that If its current inventory level is mentioned and it's very low, the ordering department knows it's serious. We have very low levels of inventory. They can order quickly to avoid stockouts. Okay. Requisition forms do not detail current inventory levels. Since current inventory levels are not mentioned, the ordering department will not know how much is in stock. They may take time in ordering, which can lead to stockouts. Obviously, if the or requisition forms do not detail current inventory levels, they don't know whether you have more inventory or less inventory. They may take, let's suppose, 5 days to order, and you might face stockouts. Now, let's suppose this requisition forms mention the current inventory levels, that only 50 kgs are left. Then they know the urgency, that it needs to be ordered immediately to avoid stockouts. Requisition forms not detailing current inventory levels is a weakness. Recommendation. Requisition forms should be updated so that they include current inventory levels. So the control is update requisition forms. They must include current inventory levels. How to test this control? Your control is, your recommendation is that update requisition forms so that current inventory levels are mentioned. How to test this control, whether it is working or not? Ask for a sample of requisition forms to ensure they include current inventory levels. Okay. Your control was requisition forms should include current inventory levels. So how to test this control? Ask sample to ensure the current inventory levels are present. If it's present, then the control is working, else not. On receipt of goods from suppliers, quantities are checked by assistant against supplier's delivery note. We have studied this in classes. You are receiving goods, right? And on receipt of goods, the quantities are checked by warehouse assistant against supplier's delivery note. I have taught you two things on that. On receipt of goods, quantities are checked by warehouse assistant against supplier's delivery note. So you can write he's not checking quality, he's only checking quantity. Not checking quality means you can receive poor quality goods. Recommendation, quantity, quality, both should be checked. And test of control, observe whether quantity, quality, both are checked or not. There is one more thing. The quantities are checked against supplier's delivery note. Supplier's delivery note will mention quantity delivered supplier's delivery note will mention quantity delivered by supplier, not what we have ordered. So checking against delivery note may lead to wrong order being accepted. Getting this point? You are checking the quantities received 10 units against supplier delivery note. So obviously supplier delivery note will mention what he has sent, not what we ordered. So there is a chance we can lead to wrong order being accepted because we just compared what he has sent with the quantity. We didn't check against what we ordered. Maybe we ordered 12 units. He delivered 10 units and delivery note also mentioned 10 units. He said, okay, delivery note 10 units, there are 10 units. Okay. We didn't compare with what we ordered, so we can accept wrong quantity. Recommendation. The goods received shall be checked against purchase order to ensure correct quantity is received. Okay. So recommendation control is that goods received shall be checked against purchase order rather than delivery note. How to test this? Observe the process of goods receipt and ensure quantity received is checked against purchase order. You can observe and see whether they're checking against purchase order. Okay. So 9 marks are done out of 18. 3 weaknesses, recommendation controls. You can copy this, then I will move towards the next one. Okay, let's move forward with three more. Each receivable clerk is responsible for processing of sales transactions for a given set of customers and is able to make changes to customer details in the master file. Weakness. Remember, master file is a confidential document. Okay. Recommendation can be access to master file shall be restricted to seniors, or you can write either changes in master file should be restricted to seniors, or if the clerk is doing, he must not be allowed to change randomly. Any changes shall be approved and signed by senior official. Okay. How to test this? For any changes to master file data, ensure proper approval was taken from senior to test whether this control is working or not. That first approval is being taken from senior. For any changes made, you can ask them approval letter from senior or sign of senior. If senior sign is there, then control is working, as else not. On a monthly basis, customer statements are produced and sent out, but no further follow-up of outstanding debt is taken by company's credit controller. No follow-up outstanding debts is undertaken credit controller. So if no follow-up of outstanding debt is taken, this can result in increased chances of debts, hence leading to loss. Recommendation asked to regularly send follow-up to outstanding debts to avoid risk of bad debts. Okay, there is no follow-up of outstanding debts being undertaken by credit control. If no follow-up of outstanding debt is being taken, this can result in bad debts. Recommendation control: the credit controller shall be asked to send follow-up letters regularly to avoid risk of bad debts. Now the control is, we have asked credit controller to send follow-up letters. Ask for a sample of follow-up letters sent. Our control was we will now send regular follow-up letters to outstanding debts. How to test this control? Ask for a sample of follow-up letters. If follow-up letters are there, that means control is working, else not. Okay. One more. We can write this: each day finance clerks post the bank receives from bank statements to the bank ledger account. The same clerk performs reconciliation. So lack of segregation of duties, we can write this. Okay. Recommendation: the task should be split and observe whether segregation is there or not. Okay. There is one more weakness, that authorized joiner form containing all details is sent to payroll department so that new employees can be added to payroll. So an authorized joiner form containing all details is sent to payroll department so that new employees can be added to payroll. But during busy periods, the company recruits temporary employees. Joiner forms are not completed. Now see, if joiner forms are not completed, if joiner forms are not completed and sent to payroll, new employees will not be added to payroll and they may not be paid. Okay. For temporary employees, what was the purpose of joiner form? Permanent employees joiner form containing all details is sent to payroll. Joiner form is sent to payroll so that new employees can be added in payroll. If new employees will be added in payroll, then only they can be paid. So for permanent employees, you are doing this. But for temporary employees, joiner forms are not completed, not sent to payroll. They won't be added to payroll and they will not be paid. This means temporary employees won't be added to payroll. Hence, they will not be paid. Hence, they will not be paid, which can lead to dissatisfaction, loss of employee goodwill. Employees will think, okay, they are not paying us because of this weakness. You didn't made a joiner form, so they weren't added to the payroll. They were not paid, so they will be dissatisfied that they are not paying us. Joiner form shall be made mandatory for temporary employees together with permanent employees, right? The control is the joiner form should be made mandatory for temporary also. Because if for temporary you are making a joining form and sending to payroll, joiner form means they will add them into payroll and they will always be paid. So our control was joiner form for temporary employee as well. How to test this control? For a sample of temporary employees, ask a joiner form. If they will produce a joiner form, that means control is working. If they fail to produce joiner form for any temporary employee, that means control is not working. So this is the test for control. So I think for 18 marks, it was a very easy question. There were still one or two more weaknesses, but my 6 weaknesses are over. Weakness, recommendation, control. Please copy this so that we can move forward. Okay, now I think we should move towards the next part now. We have done this 18 marks requirement. So 3 marks requirement, then 18 marks. 21 marks are done. So there will be 9 more marks. I think there are 2 more requirements of 5 and 4 marks. So let's see this. Describe substantive procedures auditor should perform to obtain sufficient appropriate audit evidence in relation to payroll. Payroll expense. Company, the human resource department, which is responsible for setting up employees, authorized joiner form containing all employee number is sent to payroll department, and busy periods they recruit temporary staff for which form is not filled. Thus, this information is mentioned for payroll. Nothing related payroll substantive procedures is mentioned, so I think it would be difficult for us to capture anything from the scenario because I don't think anything with respect to payroll is given in the scenario, other than these weaknesses that you fill a new joiner form, but for temporary employees, you don't fill it. Okay. So substantive procedures for payroll will be taken from our handouts. We need 5 points, and this is your substantive procedure sheet. You can write any 5 points, agree total net paper payroll records to the bank transfer. Compare payroll expenditures to prior year, investigate difference. We perform calculations of deductions to confirm correct deductions have been made in payroll. For a sample of employees, recalculate gross and net pay and agree to payroll records. Cast a sample of payroll records to confirm accuracy. Okay. Now, again, many people who have one thing in their mind linking to the scenario and stuff, I can't link to the scenario because there is no case mentioned. And do the handouts thing work? Let me open the official answer. This is the official answer. There are many points, but you need only 5. Okay. So see, for a sample of employees, recalculate gross and net pay, agree to payroll records. See this point. Okay. Same in the examiner answer. Exactly same. Compare total payroll expense to prior year, investigate difference. So this one, compare payroll expense to prior year, investigate difference. Okay. This was also mentioned in the official answer. Okay. Then see, for a sample of payments, agree net pay payroll records to bank transfer. Okay. Then official answer. Reperform calculations of deductions to confirm whether correct deductions have been made in payroll. See this point. So again, if you have substantive procedures learned from the notes, see official answer is stating the same. If something had been mentioned in the scenario, I would have linked it to the scenario by writing the company name or supplier customer name or HR department, whatever. But if nothing is mentioned directly, you can write it and gain marks. And that is why exactly I have shown you the examiner answer. Okay. You can copy this so we can move towards the last part of this question of 4 marks. Okay. Last requirement 4 marks. Quirky Quadbike is intending to list on a stock market in the next year and therefore wants to ensure the company will be compliant with corporate governance principles. Arrowball and Company has been asked to review current arrangements and identify any changes which will need to be made. The board of Quirky Cutbike comprises 5 EDs, a chair, and 4 NEDs. Okay, so ignore the chairman. 5 EDs, 4 NEDs. Okay. 2 directors are subject to re-election on a rotational basis at annual AGM. 2 directors are subject to re-election. Quirky Quadbike is proposing to establish an audit committee of all 3 independent NEDs. This is right, audit committee of independent NEDs. These NEDs are highly experienced in the industry in which Quirky Quadbike operates. Before joining Quirky Quadbike, they had senior roles in sales, manufacturing, and marketing. This is the information. Board has 5 EDs. Chairman, who is an NED, leave him. 4 NEDs. Imbalance board. Okay. And audit committee having 3 NEDs, and NEDs had senior roles in sales, manufacturing, marketing, and 2 directors are subject to re-election. Identify 2 corporate governance weaknesses faced by Quadbike, provide a recommendation to address. So 2 weaknesses and recommendation. Okay, let's start. So first weakness we have found: the board comprises 5 EDs and 4 NEDs. Many people will say there is a chairman as well who is an NED. So there are 5 NEDs, 5 EDs. No, chairman should be removed. He's at the top level. EDs, NEDs, 5 EDs, 4 NEDs. Imbalance board. Remember what you read. It is important that board makes decisions which are in the best interests of company and no group dominates decision making power of board. Recommendation: at least half of board members must be NEDs. So company should consider appointing one more NED. So it will be 5-5, right? Chairman is separate. He's the head. The board should be balanced. So 5 EDs, 4 NEDs, the board should be balanced. Another weakness: 2 directors are subject to re-election. All directors should be subject to re-election. So this is also a weakness that you should recommend that every director should be subject to re-election. And you can write from this as well that considering establishing audit committee and all member of audit committee were previously involved in sales, manufacturing, and marketing roles. All members of audit committee were previously involved in sales, manufacturing, and marketing roles. So no member of audit committee has finance experience, right? This is a weakness as well. Since no member of audit committee had experience in finance, they won't to understand financial to the level required. You know the roles of audit committee. When I taught you in the corporate governance chapter, the roles of audit committee, see, roles of audit committee: monitors integrity of financial statements. Okay, so they want to check the integrity of financial statements and financial performance. Point number 1. If no member of audit committee has any financial experience, how can they fulfill their role, monitor the integrity of financial statements? So one member must have financial experience. Okay. Recommendation: must have financial experience. So company should consider appointing a member with relevant financial experience. Okay. This is done for 4 marks. You can copy. Okay, now let's move towards the next question of this attempt. The 30-mark question is done. This scenario relates to three requirements. It is 1st July. You are an audit supervisor at Canoeing Company. So Canoeing Company is the audit firm responsible for planning the final audit of Survival Solution. Survival Solution is the client. It is 1st July. You are audit supervisor at Canoeing. This is the audit firm. You are planning the final audit of Survival. That's the client. For the year ending 30th September, company manufactures medical equipment. You attended a planning meeting at the end of June with the finance director and audit partner, and now around reviewing the prior file, meeting notes, and financial statement extracts in order to produce financial documents, planning documents. The report to management issued by Canning and Company. Report to management is management letter, right? Which explains weaknesses, recommendations. Or report to management or management letter issued by Canning following last year's audit highlighted significant deficiencies related to Survival's payroll cycle. Finance director stated that some but not all of the recommendations made in the report have been implemented during their Survival manufactures equipment at its factory and stores finished goods within its warehouse. Due to limited space, some finished goods are stored in several third-party warehouses. During the year, the company spent $650,000 upgrading and repairing its factory and warehouse. As part of this upgrade, Survival Solutions exchanged a large item of plant with a carrying amount of $85,000 and a fair value of $90,000 for a new asset worth $120,000, with the difference being settled in cash. Asset has been recorded at the amount paid in cash. So Survival Solutions manufactures equipment at its factory, stores finished goods within its warehouse. Due to limited space, some finished goods are stored in third-party warehouses. Some inventories are third-party. 650,000 spent upgrading and repairing its factory warehouse, and exchange a large item of plant with a carrying value of 85, fair value of 90 for new asset worth 120,000, difference being paid in cash. Asset has been recorded, the amount paid in cash. In order to maintain company's market share, Survival offers extended credit terms to a number of customers. Survival Solutions offers its customers a 3-year warranty on its products. The finance director has confirmed that the 2005 warranty provision will be of similar value to 2004. Last year, company changed its main material supplier to a cheaper alternative. This has resulted in increase in customers claiming on their warranties and product efficiencies. In 2005, the financial controller left to take up another role. A replacement has been recruited but will not start until late September. As a result, finance department has been understaffed. Financial controller left. A replacement has been recruited but will start in September. Finance department understaffed. So the year end is 30th September. And the financial controller left in June. So close to year end. Key people leaving the company. It was recently discovered that a batch of supplier invoices had been miscoded and therefore had not been recorded as payables. An investigation is still ongoing to identify why the miscoding occurred. So a batch of supplier invoices had been miscoded. So what is the impact of this miscoding? That recently discovered that a batch of supplier invoices had been miscoded. They had not been recorded as payables. So invoices were not recorded as payables. That means due to this, your payables were understated. Financial statement extracts for 2 years, 2004-5, revenue, cost of sales, GP, operating expenses, operating profit, inventory, receivables, payables. Okay. Seems to be an audit risk question. So ISA 230 documentation requires auditors to prepare audit documentation for an audit of financial statements on a timely basis. State 3 purposes of documenting audit work. So what are the 3 reasons of documenting audit work? Very easy requirement from the chapter of audit planning and documentation. Now, you know that the 3 purposes of documenting audit work. So audit documentation is from the chapter of audit planning and documentation, and audit documentation is called working paper. The documentation is called working paper. So 3 purposes or 3 reasons of working paper or documenting audit work. What are the objectives or reasons of documenting audit work, working papers? They act as proof, help in legal cases, helps in partner checking work of team, helps for next year audit planning, especially in case of opening balance. So you can just elaborate them for 1 mark. Okay. Act as proof. Documenting audit work helps in acting as a proof that audit was performed in accordance with ISA. Helps in legal cases. If there is any legal issue, documentation will assist compared to oral statements. Helps in partner checking work of team. Partner knows through documentation what their team is doing, whether they're following instructions or not. Okay, so this is a 3-mark requirement. Please copy. Okay, now part B, using the table below, calculate following 3 ratios for both years to assist you in planning the audit of survival solutions: operating profit margin, debtor days, payable days. Okay, so operating profit margin is operating profit over sales, receivable collection period, receivables over sales into 365, and payable days, payables over cost of sales. Okay, formulas are not required to be shown. Okay, so payables payment period is basically payables divided by cost of sales. $46. And then 2350 divided by 10680 to 365. 80. Okay. Then we have receivables. So 2380 divided by 17860 into 365. And then we have 950 divided by 17280 into 365. 20. $49. Operating profit margin is operating profit divided by sales, 200, and this 2500 by 17280. (23.6%). 14.5%. Okay, please copy this for 3 marks. Then we will move towards the 14 marks requirement. Okay, now the next requirement, part C, is using the information provided and ratios calculated. Describes 7 audit risks, auditor's response to each risk. So using the information and ratios, 7 risks and auditor response to the risks. So I've taught you when receivable days are rising, so receivables may be overstated, and review age data analysis, and uh, to assess valuation of receivables. Okay. So I will write 1 point from here. Because I have to write the risks from information and ratios. So I will write from the ratios I have taught you. The receivable days have increased from 20 to 49. Remember, what was the risk? There is a risk regarding recoverability of these receivables. Hence, receivables may be overstated. It's very important to mention understated, overstated, or it control inherent detection risk. Okay, so there is the risk regarding recoverability of these receivables because of receivable days are increasing. You are offering more time period, recoverability risk increases, so receivables may be overstated. Remember the response. Do testing post year end. Cash receipts and review aged debtor analysis to assess valuation of receivable. Okay, you can write from the information as well and from the ratios as well. So information states that some finished goods inventory stored at third-party warehouse. So when inventory is held at third party, what is the risk? There is a risk regarding valuation of this inventory. Hence, inventory may be misstated. Because if something is in front of you, you can assess valuation. But if something is at a third party, it's not in front of you. There is a risk regarding what is that value of that inventory. And if you don't know the value of inventory, there is a risk that your inventory in your balance sheet is not correctly recorded, misstated. You can write one more risk here, that there is a risk that the inventory held at third party is not included in inventory count. Hence, inventory may be understated then. Okay, please listen to this statement again and again by rewinding. I will repeat it once again, but if you don't understand, you can rewind it once again. The company is keeping some inventory at third party warehouse. There is a risk, right? What is the risk? That what is the value of the inventory held at third party? Maybe it's in good condition, maybe it's bad condition. We don't have it in front of us. So there is a risk regarding valuation of that inventory. And when you don't know the correct value of inventory, your inventory may be misstated. Okay. It may be overstated, may be understated. So I'm writing misstated. However, if you write like this, some inventory is held at third party warehouse, there is a risk that inventory held at third party warehouse is not included in inventory calculation. Hence, inventory may be understated. Then you haven't included third party in your inventory, so you have understated inventory. So, response. So, inventory is held at third party. There is a risk it might be over undervalued. You can take third party confirmation, or you can visit warehouse to assess the valuation of inventory. Similarly, the company spent 650,000 on upgrading and repairing its factory. Very easy point. So when you make expenditure to upgrade, repair, what is the risk? Okay. You spend 650,000 on upgradation. So there is a risk that this expenditure is not currently classified into capital revenue. When you don't correctly record expenses capital or revenue, your PPE gets misstated and your expense gets misstated. Like if you include capital into revenue. So expense overstated, assets understated. If you include revenue as capital, assets overstated, PP overstated, expense understated. So you have mentioned the risk that this expenditure is not currently split into capital revenue. So PP or expenses may be over understated or misstated. Remember the response. Review, breakdown of invoices to assess nature of expenditure. If capital, ensure it is capitalized as asset. And if revenue, ensure it is expensed to income statement or statement to profit and loss. Okay. Let's write one more here. There is one point here that you exchange a large atom of part with 120,000. So there may be misstatement in assets and asset has been recorded. The amount patient cash, so asset is understated. I will write this point as well. Then finance director is saying that this year's provision will be same as last year. but you change its main supplier, so customers are now claiming warranty, so provision may be understated. Okay. Financial controller left, supplier batch has been miscoded, so they were not recorded as payable, so payables are understated. Okay. So there are 3, 4 more points which will complete 7. I will write one more now. One common risk which comes every time now and then. The financial controller left and finance department is understaffed. So when there is less staff, what happens? There is a risk of increased errors from overburdened members of finance department, leading to increased inherent risk, either over understated or either inherent control detection risk. So whenever a person leaves close to your end, it's understaffed, right? So all the burden falls on the remaining members. They become overburdened, which may lead to errors. Okay. This has been discussed many times in audit risk question, not just finance controller, any key member leaving close to your end. Okay. So the burden falls on the remaining members. They get overburdened, like work was done by 5 people, one left, workload now on 4 people. They get more burdened, more errors. Okay. Response is easy when there is a risk of errors. The audit team shall remain alert throughout the audit for any errors in finance department. Okay. So out of 7, I have done 4. Now the space is not left, so you can copy it. Then I will switch the screen and then write the remaining 3. Okay. Okay, now after this 4 risks, I think, what was the demand? 7 risks. I have to write 3 more, so I will move towards 3 more. Okay, so company offers 3-year warranty, and they have kept the provisions same as last year. And last year, company changed its material supply to a cheaper alternative, which has resulted in increase in customers claiming on their warranties. So we can write 1 point here. Since last year, due to change in material, more customers are claiming warranty, but provision is kept same as last year. Okay, we have kept the same provision even though there are increase in customers claiming warranties. So since customers are claiming more warranties, but you have not changed the warranty provision, kept as same here, so there is a risk that provision is understated. If there are more complaints, you should increase provision, right? But you have kept the same provision as last year. Okay, so that means there will be a risk that your provision is understated. When complaints are rising, increase the provision. Since you are keeping the same provision, so provision is understated. Remember the response. Discuss with management the status of provision and ensure it's made in accordance with the IAS 37. Okay. There is one more risk here that company exchange a large item of plant with an amount of 85,000, fair value of 90,000 for a new asset worth 120,000, difference paid in cash. Asset has been recorded, the amount paid in cash. The company exchanged plant having fair value of 120,000. Sorry, fair value of 90,000 with a new asset worth $120,000 with difference paid in cash. What is the difference paid in cash? The fair value of asset was 90,000. You exchange it for asset worth 120,000. Difference 30,000 was paid in cash. The asset has been recorded at amount paid in cash. This is a wrong treatment clearly. You replaced an asset of 90,000 with 120,000. So asset should come at 120,000. You paid the difference 30,000 in cash and recorded asset at 30,000. There is a risk that asset is understated. See clearly that you replaced an asset which was 90,000 for 120,000 and paid 30,000 in cash. So since now you have asset of 120,000, it should be recorded at 120,000. You recorded at 30,000, so your assets are understated. Response. Discuss with management and ensure asset is recorded at fair value 120,000. Okay, you should ask management and tell them that asset must be recorded at 120,000. There is one last risk in front of me. It was recently discovered that a batch of supplier invoices were miscoded and not recorded as payables. See, it's mentioned clearly that a batch of supplier invoices were miscoded. They were not recorded as payables. What is the risk? There is a risk that payables may be understated. Review and ensure the miscoded invoices are traced and included in payables. Okay, you should make sure that these miscoded invoices are included in payables. Okay, so 7 risks and responses are there. So 4 I wrote before, 3 I wrote now. I've told you multiple times it is never a possibility that you score 0 marks in audit risk questions. Might be task 7, you are comfortable with 5, 6, 1 or 2 are difficult, but majority are always repeated from the questions done in classes. Okay, so please copy this. Okay, so after completing this question for audit risk and responses, let's go to the next question. This is the last question of the September-December 2025 attempt. I'm reading the question. Please follow up. It is first, this scenario relates to 5 requirements. So there are 5 requirements. It is 1st July. You are an audit manager at Flatiron and Company. So you're an audit manager at Flatiron and Company. So this is the audit firm. You are responsible for auditing 2 clients, Tribeca and Chelsea. These are the clients. Following matters have been brought to attention. So it is 1st July. You are audit manager at Flatiron, which is the audit firm. You are responsible for 2 clients, Tribeca and Chelsea. Following information has been brought. Tribeca manufactures stationery products, and as the year end 30th September 2005, the interim audit is due to commence next week. Forecasts profit before income tax is 19.1 and inventory is 8.8. So profits and inventory is given. Inventory. In previous years, Tribeca has carried out a full inventory count. In previous years, Trapke has carried out a full year-end inventory count at its warehouse in order to confirm inventory quantities. However, this proved to be too disruptive for the business. Therefore, in October, Trapke implemented a continuous inventory counting system with counts carried out on a monthly basis. The company's internal audit department conducted testing on the implementation of the new system. The continuous inventory counting process involves counting all lines of inventory periodically throughout the year so that by the end of the year, all lines have been counted. Any errors noted during the monthly counts are adjusted for in the inventory system after completion of the count. So in previous years, Trapke has carried out a full year-end inventory count at its warehouse in order to confirm quantities. However, this proved to be too disruptive. Therefore, in October, Trapke implemented a continuous inventory counting system with counts carried out on a monthly basis. The company's internal audit department conducted testing on the implementation of the new system. The continuous inventory counting process involves counting all lines of inventory periodically throughout the year so that by the end of the year, all lines have been counted. Any errors noted during the monthly counts are adjusted for in the inventory system. Purchase and other expenses. Trapke produces monthly management accounts which contain year-to-date information for the statement of profit and loss. Purchases and other expenses for the 9 months to June 2005 were 51.2 million, to June 2004 were 57.5 million. So Trapke produces monthly management accounts which contain year-to-date information for the statement of profit and loss. Purchases and other expenses for the 9 months to June 2005 were 51.2 and to June 2004 were 57.5. So here again, purchases and other expenses for 2005, 51.2 and 2004, 57.5. Flatiron, the audit firm will undertake testing of purchase and other expenses during both interim and final audit. So the audit firm will undertake testing of this purchase and other expenses during an interim as well as final. The other company is Chelsea Company. Chelsea Company manufactures lighting equipment. Its year end is 31st May. The final audit commenced 2 weeks ago and the draft financial statements show profit before tax of 5.3 and total liabilities of 13.2. This was the data of Trapke Company, profit and inventory. And for Chelsea Company, profit and liabilities is given. Director's bonus. The board of directors of Chelsea is made up of 9 directors. Each director receives an annual bonus which is detailed in their contract of employment. The bonus is based on the increase in profit before income and tax as compared to prior year. Chelsea's board agrees the bonus based on draft profit before income taxes, which is then paid in June each year prior to finalization of the year-end financial statements. Current year bonus was paid to each director in June 2005 and the costs were accrued and recognized within the payroll expense for the year ended 31st May 2005. Separate disclosure of the bonus for each director is required by local legislation in the country in which Chelsea is based. So what is the information of director's bonus? The board of Chelsea is made up of 9 directors. Each director receives an annual bonus as per the contract of employment. Bonus is based on increase in profit before income tax as compared to prior year. So bonus is based on increase in profits. Chelsea's board agrees the bonus based on draft profit and before income and taxes figures. So you agreed the bonus based on draft figures of profit, not the actual figures, on draft figures, which is then paid in June each year prior to finalization of the year-end financial statement. And the bonus is paid in June prior to finalization of financial statements. The current year bonus was paid to each director in June. What was the year end? May. So bonus was paid in 2005 after the year end, and the costs were accrued and recognized within the payroll expense for the year ended 31st May 2005. So your year end was 31st May. You paid the bonus in June, but since bonus was payable, so it was included as an accrued expense in the financial statements. That, for example, you have to pay 1 million bonus. For example, you have to pay 1 million bonus. So this was included as an accrued expense in May's financial statements to be paid in June. Separate disclosure of the bonus for each director is required by local legislation. So local laws require separate disclosure of bonus by each director. So there were 2 companies, Trapke and Chelsea, and the information for Trapke of inventory and purchases, and for Chelsea the bonus is given. Let's see what the requirements are. Okay, now after every information that you are the audit manager of Flatiron, which is the audit firm, you're responsible for 2 audit clients. One is Trapke, which manufactures Tritney products, inventory is given, and purchase other expenses are given, and then Chelsea Company, the bonuses are given. The question is first 5 marks being asked. Describe audit procedures auditors should perform in order to place reliance on continuous counts of inventory. So here audit procedures are being asked not for the inventory, but for continuous counts. Okay. Now, if you go in the handout, audit procedures before, during, after the count, and together with that, there was a continuous count portion. Okay, so we need to write procedures regarding the continuous count. So here is the continuous count, which you need to write because the question didn't ask you to write procedures for inventory. It asked you to write procedures not for before, during, or after, but it asked for continuous count. Okay. Now, there are 5 procedures of continuous count. Let me check the requirement. Yes, 5 marks. So we need to write these 5. Ensure controls are adequate by at least attending one perpetual count. So for continuous count, you need to make sure that you are attending one count. Review schedule of counts to confirm all inventory lines have been counted or are due to be counted. You must check the schedule of the count that all lines are being counted. Undertake test counts from records to floor and floor to records. You check the records that whatever record is stating that is on the floor, and whatever is in the floor that is in the records. Like for example, if records are saying 1,000 units, on floor, check there are 1,000 units or not. If floor is saying 1,000 units are there, check records whether 1,000 units are there or not. Review and adjustments made to inventory records on a monthly basis to identify differences. So you need to check any adjustments made, whether there are any differences, and differences will require discussion with management. So these are the 5 procedures. Okay. And let us check the official answer, whether the examiner is fitting them or not. You see, audit procedures for continuous inventory count. So there are many. Obviously, we need to write 5. The first one, see, attending at least one count. Okay, ensure controls are required by attending at least one count. C, attend at least one of the inventory counts to ensure instructions are being followed. Or controls are required, instructions being followed, same thing. Okay. Review schedule of counts to confirm all inventory lines have been counted or are due to be counted. C. This one. Review schedule of counts to confirm all inventory lines have been counted. This one, point number 2, review schedule of counts to confirm all inventory lines have been counted. Undertake test counts from records to floor to records. See, undertake test counts from records to floor to records. Okay. Discussion with management, any adjustments made. See, review any adjustments made to identify differences arising. Differences arising. Okay. And then if significant differences arise, discuss with management. So discuss with management if any significant differences arise. So obviously, it's not like that you need to write word to word. You can just remember and explain the concept in your own words, or you can write them as it is. The reason of showing the official answer is that you can clearly see that whatever points are being there in the notes, you have them in the examiner official answer as well. Okay. So this is from your handout for continuous perpetual inventory counts. I always used to say that this substantive procedure handout is a very key handout. So make sure you remember all the aspects of this. Part B. Describe substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to purchase and other expenses. Okay. So now 5 procedures for purchases and other expenses. Okay. So in the handout, there was a portion of expenses, if I remember. Right. So expense and purchases, that is being asked. Okay. So obviously purchase is also an outflow. It's also an expense. So you can write the expense ones and write the purchase one as well. Okay. So compare current year expense with last year and investigate difference. You can write compare purchases and other expenses with last year Investigate difference. Okay. For a sample of purchase and other expense, verify supporting documentation like payment voucher, bank statement, etc. Bank statement. Then purchase and expense is a profit and loss statement item. Okay. See, recalculate casting, or it's the same thing. Ensure purchase and other expense pertain to the relevant accounting period. Cut off. Now for sales, remember there was one procedure for sales. Let me just check it for you. That for completeness of sales, what do we used to do? Mm, Sales invoices and GDNs were compared, right? Okay. Invoices compared with goods dispatch note to ensure completeness. Now, here invoices in purchases will be compared with GRNs, right? And remember one thing, revenue is sales, income, and purchase is outflow. So you can just write the same ones in purchases. Now, in this question, it asks for purchases and other expenses, right? If it asks only for purchases, you should not say that there was no purchases mentioned in the handouts. Okay, it's just the opposite of sales. Like compare overall revenue against prior years, investigate difference, compare overall purchases against prior years, investigate difference. Calculate gross profit margin compared to previous years, investigate difference. That cannot come in purchases, leave it. Obtain a schedule of sales. Obtain a schedule of purchases broken into major categories compared to supplier. Select a sample of sales invoices, purchase invoices, and recalculate expense tax that has been correctly applied to invoice because supplier will charge the tax. Select a sample of credit notes. Credit notes will not come in, obviously, purchases. Select a sample of customer orders, agree to dispatch notes. Select a sample of supplier orders and agree to dispatch notes. Goods received note. Here it's customer orders, there will be supplier orders. Goods dispatch note, goods received note. Okay. And select a sample of both pre and year and post year and invoices compared to sales invoices. You can write purchase invoices. So whatever is the revenue, sales, purchases will be opposite of that. Like I will write point number 6 just to give you confidence that it's the same thing, just opposite of purchases. That select a sample of supplier orders and agree to goods received note to ensure completeness. Purchase orders and agree to goods received note and purchase invoices. Purchase invoices through to inclusion in purchase ledger. Okay. So you had the expenses portion as well. You can write purchase other expenses same, or you can simply, if it asks for purchases, just go in revenue and write the opposite of revenue in all purchases. Okay. So their sales invoices were compared with GDNs. Here, purchase invoices are compared with GRNs. Okay. Please copy this. Okay. Third part, describe substantive procedures auditors should perform to obtain sufficient appropriate audit evidence in relation to Chelsea's directors' bonuses. Now, for directors' bonuses, we have already read it. So let's write substantive procedures on directors' bonuses. Directors' bonuses, emoluments are the same thing, right? So how many marks are there? 5 marks. So 5 procedures for directors' emoluments. Okay, so first agree individual payments to payroll records, bank statements. Okay. Review board minutes for evidence of any emoluments. Emoluments can be anything, any benefit given to director, but here it's specifically asking for bonus. So I will use the word bonus. Consider adequacy of disclosures of directors' bonuses. Now, this point can be written in the examiner answer in these wordings. Ensure director's bonus is disclosed in accordance with local regulation. It's the same thing. Okay. Ensure director's bonus is disclosed in accordance with legislation, or consider adequacy of disclosure in accordance with legislation is the same thing. Okay. Obtain a representation from management confirming completeness of bonus. Okay. Obtain a representation from management confirming completion of bonus. Review directors' contracts to ensure bonus consistent with contracts. Okay. So I'm sure in the examiner answer, these will be the things like written representation, board minutes, contracts. See, contracts point. I wrote the contracts point. Agree bonus to payroll records and bank statement, this point. Review board minutes, bonus agreed. Obtain written representation. So all points are there. Okay. So you can note this as well. Okay, so let's move towards the last part of this question. It is now 24th August. The audit of Chelsea is almost complete and the auditor's report is due to be signed shortly. Now it relates to Chelsea. So let's see about Chelsea. Chelsea's financial year end is 31st May. So year end is 31st May. It is now 24th August. Audit of Chelsea is complete and the audit report is due to be sent shortly. So 31st May is the year end and it is now 24th August after the year end. May was the year end. It's now August. Following matter has been brought to your attention. A key supplier of Chelsea, Fifth Company, is suing the company for breach of contract, alleging that Chelsea failed to complete an order for the purchase of a significant item of plant and machinery. The lawsuit was filed prior to year end, and the sum claimed by the supplier is 0.6 million. This has been disclosed as the contingent liability in the notes to the draft financial statements. Okay, so Chelsea's year end was 31st May. It is 24th August, 2-3 months after the year end. Audit is complete. Following matter has been brought to your attention. So this matter is on 24th August after the year end, right? Because year end was 31st May. It is 24th August after year end. The following matter has been brought. So it's event after the balance sheet date, year end, subsequent event. That a key supplier is suing us and they're saying that you didn't complete an order. Lawsuit was filed before year end. Some claimed is 0.6 million. It has been disclosed as a contingent liability in the notes to the accounts. Correspondence has just arrived from Fifth indicating they are willing to settle the case for a payment of 0.4 million. It is likely Chelsea will agree to this. Okay. So there is an event after the balance sheet date. That year end was 31st May, and on 24th August, after the year end, the correspondence arrived that a supplier is suing us. Lawsuit was filed before the year end. Some claimed is 0.6 million, and correspondence has now arrived that the company, the supplier, is willing to settle the case for 0.4 million, and it is likely we will agree to this. Explain whether financial statements need amendment. Describe 2 audit procedures that should be performed to form a conclusion on any amendment. Stop. Now, if you remember the classes of subsequent events after the balance sheet date, usually when an event comes after the year end was 31st May, an event came on 24th August. Usually there are 3 requirements. Number 1, whether FS needs amendment. Number 2, audit procedures. And number 3, impact on audit report if issue remains unresolved. Here there are only 2 requirements. Whether FS need amendment, audit procedures. It hasn't asked impact on audit report. Okay. Now for this question, I usually told you 5-step approach to answer. that when the question asks whether FS needs amendment, audit procedures impact on audit report. So first you have to write the case intro from the scenario. Then you have to write under IAS 10 whether it's an adjusting or a non-adjusting event. Then you have to write 3 audit procedures. Discuss with management, inspect supporting documents, take expert legal advice, elaborate it in your own words, then calculate materiality, and finally impact on audit report. I will not write the impact on audit report because it hasn't asked, but I will do the 4 steps. Discuss the issue case intro under IS 10, adjusting, non-adjusting, audit procedures. 3, discuss with management, inspect supporting documents, take expert legal advice, but I will write 2 procedures. And finally, the materiality. Okay. Had the question asked me everything that whether FS needs amendment, audit procedures, impact on audit report, I would have done all 5 things. But now impact on audit report is not required. So it's a clear case that year end is 31st May. And on 24th August after year end, we became aware of a matter that supplier has sued us 0.6 million. Now they're agreeing for 0.4 million. Companies agreeing to this. We need to say whether FS need amendment, audit procedures. We don't have to write impact on audit report, but we know the 5 steps of this answer, that case intro under IS 10, adjusting, non-adjusting, then 2 audit procedures, and then materiality. Okay, let's start. Okay, so whether FST amendment, audit procedures impact on audit report, we have 5 things to write, but we will not write the impact on audit report. We will write the 4 things. First, case intro. Okay, I've written the case intro that a key supplier has sued us for breach of contract, and they claimed 0.6 million, but correspondence has now arrived that they are willing to settle the case for 0.4 million. Case intro. Then I need to write under IS 10 whether it is adjusting or non-adjusting events. So lawsuit was filed prior to your end, right? Lawsuit was filed prior to your end. It was not something which came abruptly like flood, fire, bomb, earthquake. Okay, it was filed prior to year end. So since it was filed prior to year end under IS 10, this is an adjusting event as it provides evidence of conditions that existed at balance sheet date. Hence, it should be adjusted in financial statements. Okay. Company has disclosed it actually. It's wrong. Had it been a non-adjusting event, it needs to be disclosed. But since the lawsuit was filed prior to year end, the abrupt events like fire, flood, earthquake, damages, these are non-adjusting events which need to be disclosed. Since this was filed prior to year end, it provides evidence of conditions that existed at balance sheet date. So it's an adjusting event. Hence, it should be adjusted in financial statements rather than being disclosed. Okay. Then case intro under IS 10. Then following audit procedures can be performed. Okay, you can perform the following audit procedures. So the audit procedures are discuss with management, inspect supporting documents, and take expert or legal advice, but I need to write to audit procedure. That's fine. But this is not going to earn marks. You need to elaborate it, okay? Discuss with management. What to discuss with management? Anything related to this scenario, okay? Whether they are actually agreeing to settle the case and pay $0.4 million. Okay, it's likely that Chelsea will agree to this. So discuss with management whether they're actually agreeing. Okay, inspect supporting documents like legal notice, settlement letter from Chelsea. Chelsea gave us legal notice first that they're filing a case. Then they gave us correspondence that they're willing to settle the case for 0.4 billion. Settlement letter. So settlement letter, legal notice, supporting documents. Okay. So case intro under IS 10, audit procedures. Okay. Then materiality. The issue represents how much? So now they're agreeing for 0.4 million. Okay. Now they're agreeing for 0.4 million. So the issue is of 0.4 million. They claim 0.6, but they're agreeing for 0.4. So the issue is of 0.4. And what was Chelsea's profit? 5.3 million. Profit before tax. 5.3. So 0.4 over 5.3. 7.5% profit. Hence, it's material, but not pervasive. Okay, I will stop here. I gave the case intro under IS 10, adjusting, non-adjusting, audit procedures, then materiality. The question didn't ask impact on audit report. Had it asked, so issue is 7.5% of profit. Hence, it's material but not pervasive. So, in that case, opinion is qualified. Okay. So we have completed all the parts of this question and this September-December 2025 past paper. Like we have completed all the past papers. Hope everything is clear to you. You can copy and leave. Thank you.